Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, September 25th, 2018. In this video, I want to do an update on the semiconductor sector. So what we'll do is we'll take a look at the three main semiconductor ETFs that I follow: SOXX, XSD, and SMH. I'll start with SOXX, that's what we're looking at here. That one tracks the PHLX SOXX semiconductor index. That index has been around forever. That's really the benchmark. It's been around for decades now, and that's the index it tracks. And it also tracks the same index at SOXL and SOXS. Those are the 3-time long and 3-time short semiconductor ETF. So if you're going to trade those, you definitely want to keep an eye on this chart and not the others. So you want to make sure you're looking at the same index. So this one again is a non-leveraged. And all right, let's just jump into the charts. I also want to go over, before I do that, or no, I'll get to it in a second, the relationship between the stock market, namely the tech sector, the tech-heavy QQQ, and the semiconductors. We're going to get to that chart in a second and look at some developments there. So for the most part, what stands out to me is, and I've been, calling for a correction in this sector for a long time, and unlike the broad market, the S&P 500, which just recently made a new high, the semis topped back earlier in the year. In fact, they topped all the way back on March 13th right there. You can see that was a high in SOXX. It was a high in two of the three semiconductor ETFs. So, technically it's a top, but we've been trading sideways since then. So you can't say definitively that's the end of this cycle. That's the end of the bull run, the current bull run in the semis. You just can't say that. And I'll show you some levels where I think you can start to say that is most likely, that the top was most likely put in. I still think it was, but again, that's just more of my hunch on reading all these charts and some other things. And I'll get to that in a second. So there it is. That's the top back there. And I'll show you the other ones in a second. I have a lot of variations on this chart, but essentially I have a long-term trend line here that went back all the way off the early 2016 lows. I had a price channel these three lines together. I just had to jump out to a 2-day period chart to show you to go back to the beginning there. And that trend line broke, and there has been some sloppy trading since then. So to really look at it without all these trend lines, what the bigger picture is on the semis is they've been trading, they've been locked in a sideways range now, going back into well, look, it's been a year now, back into the fall of 2017, and that's the bigger picture. So while they're not going down, they're not going up either. It's a sideways trend, so nobody can really claim victory there, at least for the entire sector. Certainly there are some semis that are making new highs. There's also some that are well off their highs and already in bear market or correction mode, and we'll get to those in a second. So there it is. And again, this is one draw on the daily time frame, and it shows you here these divergent highs. And divergent high 1, 10% drop, a 14% drop on this second divergent high right here. So we had a series of 3 consecutive divergent highs, making up just one large divergent high. And that led to the last one was followed by a 17% drop. And again, since then, we have not taken out that high from back there. So let's look at a couple other things. Let's look at SMH. Again, just another semiconductor ETF, which this one also topped, I should say, back in March 13th as well. This is the Van Eck Vector Semiconductor ETF. So you're just having a lot of overlap, but some of the components are different, and of course the weightings are different as well. But this chart looks very similar to SOXX, and there you can see it on a daily time frame. And then the last one is XSD. This is the Spiders S&P Semiconductor ETF. Now that one did recently make a new high, and you can see how I have these lines drawn here. This is a large wedge type pattern. That high was a divergent high, just as each of these highs were before. And again, they set up for very profitable swing trades. You've had many swing trading ops, and a trend trader has been rewarded so far for sticking long with it. But again, it depends on your trading style. My primary trading style is a swing trader, and because this chart, and especially these weekly charts that I'm going to get to in a minute, look extremely toppy. I mean, I have a high degree of confidence. Doesn't mean it's guaranteed it'll happen, but I have a high degree of confidence that we're at or already put in the highs in the semis. And once we get to some of these levels I'm going to cover here in a minute, I think the floodgates will open, and we'll start to see some some pretty swift and big moves down. So there it is on the daily time frame. And this is what SOXX looks like on a weekly time frame. Some of these were divergent highs here, or trend line breaks, but really what I've highlighted here are just the corrections that we've had over the past decade. And you can see they're quite lucrative. As I say, stocks tend to fall a lot faster than they rise. So there's your, corrections look like the average, well into the 20%, close to 30%. And that's what we've had. And this is the current trend right here. That was the bottom was put back there. We had a nice divergence at the lows. I believe that was pointed out at the time. There was also a big symmetrical triangle on the semis that broke out back then. So you had a divergent low that was a catalyst for this rally. But you can see just eyeballing the distance, the length of these runs. This was one of the longer rallies right here. Here, let's use an arrow tool for that. One of the longer advances over the past decade in the semis, and you can see this one's very long in the tooth. Doesn't mean it can't continue. It just means, again, everything is cyclical in nature. You get at the bottom of a correction, a bear market in the semis. What happens is that glut of chips that were on the market starts to dry out, orders start to pick up, and a new cycle begins. And towards the top, that's what happens. You start building inventories. There's a glut of chips, supply falls. Demand falls, and then chip prices collapse. But either way, forget about that's the fundamental part of it. Technical, there it is. There's a very well-defined, in my opinion, a well-defined uptrend line. That uptrend line broke back here in March, end of March, back tested again right there. So this line right here is just showing a downtrend line. This line and this line here form a symmetrical triangle pattern. Something to watch, certainly. An upside break would be bullish, and that could happen and extend the cycle. But you can see up to these divergence lines that really should stop right here, right there. That's where the divergence ended, because that was our high back here. Prices would have to make a higher high. And look, if they did, there are big divergences. So we can extend these lines out. That's probably why I had those lines out there like that, to just show you some kind of scenario that looks like this. Maybe, and this might coincide with that blow off top in the market some people are looking for before we put a top in the broad market. So maybe a blow off top, semis break out of this triangle pattern, then reverse while putting in a even larger divergent high there. Freaking, that shouldn't have been an arrow tool. This should have been a line tool, but I think you see what I was going at there. So that's it. Price targets. Forget about these earlier price targets. What I'm really looking for on the semis, and I'll show you on SOXX right here, just like the broad market, I think we'll come back in at some point this year and test those lows. The semis actually had a correction before the broad market back in November of 2017, and you have 3 tags of that level. That is a very significant support level, comes in around 164, give or take. So that's what I'm looking for. Now you can also see on this SOXX daily chart here, this uptrend line, it's similar to that minor uptrend line I highlighted on QQQ in yesterday's video. So let's watch for that. Below that, you can see I do have a horizontal support line right about here. And then this would be the next stop there on the semis. Just a quick look. I jump over to the 60-minute chart. Here's SOXX on the 60-minute time frame. We had a divergent high back here. That was followed by a drop of about 7%. Here's another divergent high so far, followed by a drop of also about 7%. I put up some fibs there. You can see from the high there down to the lows. We stopped cold at this 78.6. These dotted blue lines are the Fibonacci retracements, and here's the 78.6% retracement, which is a key fib level, and that contained this rally so far in the semis, and they're down today, so we'll see. In other words, this may be the start of another leg down if there's a larger correction to come. Okay, and this is something I wanted to talk about. I've mentioned this many times in the past, that the semiconductors are often considered a canary in the coal mine for the technology sector, which only makes sense. Tech is all evolves around chips. Whether you're Microsoft, whether you're Apple, chips are going into the things that fuel the technology sector. And so when chip sales or the semiconductors start to go down, they're only going down because of their fundamental outlook is not as good. The insiders know first. They're selling, meaning the company, insiders that work with the company or in the business, in the industry. And then well after that, the media will jump on it once the semis have already dropped 20, 30%. They'll start to come out and tell you they're in a bear market. But what I've done here is I've taken arrows. These orange arrows mark SOX tops and SOXX. So tops in the semiconductor as far as rallies go. There it is. So SOX is in purple, QQQ is in white. By the way, this is a 10-year weekly chart, and so you can see, as I showed you here, that's where the semis peaked. And then months later, many months later, the stock market peaked. So that's what I'm showing in each of these examples. Semis topped, stock market topped. I'm going to show you the time frames here in a second. We're going to measure it out, see how long the lag time was. Semis topped, stock market topped. Semis topped, and I'm talking corrections. Of course, this whole span we have been in a bull market, so we're looking just now at corrections, and that's all we need to focus on now. Sooner or later, as I just showed you on that SOXX weekly chart, this rally, this cycle is getting very long in the tooth. So one of these tops will be a more significant top, but even if we just get a correction, we're looking at, I already showed you, gains or corrections that measure well into 20% in the semiconductor sector. So let's just look at about how long this, if history is any indication. So back here, you can see the pop-up box on the left. There's the date, roughly February 18th, 2011. And what I'm going to do is I move to the left here. I hit the top where the stock market peaked and then corrected. And you can see in the lower end of the pop-up box, just above the green percentage, net percentage, 10.95%. Forget that number. Look at it, the time there, 5.1 months. So that tells us semis topped over 5 months before the market. Semis peaked back here in around March 2012, with the stock market continuing to rally, at least QQQ, for almost 6 months, 5.8 months. Another top here in the semis, if I can grab that, there it is. And so I move to the right, and it tells me that one was about 6 months. Okay, so there's some pattern here. We're talking about 5 to 6 month lag period, at least historically. And now you can see on the arrows that I have here. Let's just zoom in a little bit here. This arrow now would be up here. There's the peak in the semis right there. And as I just told you, that was back in early March. And here we are today. Now, we can't say it. Well, actually, the Q's so far peaked here. There it is, 5.8 months. Coincidence? Maybe. We'll see. Time will tell. So, but if that proves to be a top in QQQ, that recent top that we had, then we're right on the mark, right about that, between 5 and 6 months. So there it is. Okay, so now what I'd like to do is go through the individual components of SOXX. I'll try to run through these fast, and I'm going to start with the weekly charts because this has been a slow roll, this top, very slow roll. Like again, we're going back to March when the semis topped so far. That was the top. TSM, and I'm going through these in descending order of market cap, so it doesn't necessarily mean that TSM is the largest weighting. It may be of SOXX. You can pull that on the site, their website. Just go to SOXX ETF, Google that, and then holdings, put the word holdings in there and you'll get to it. But either way, these are by market cap. So TSM has now, it's been jumping back and forth, leapfrogging, I should say. Intel for the title is the largest semiconductor. TSM takes the title right now at 220 billion. Showing 220.2 billion, if that matters. Intel's at 215.1 billion. So here's the largest semiconductor stock, and this is a stock to me that has topped. You can see a pattern again. We're just going to start here with the weekly charts. If I can get through these quick enough, I'll go to the daily charts. That helps us hone in on some entries, get more specific on the near-term stuff. But this is the bigger picture. So what I see here, all these divergent highs, and it doesn't look like much, guys. I always say this. I use log scaling. There's a drop of about 18%. This what looks like a little drop was 33%. These are rough measurements. These came after divergent highs. You can see the negative divergence. Right here we had negative divergence up to this point. Actually, that line should be a little bit somewhere right. Yeah, that's it. That's the high. And I have this line just in case TSM happens to eke out and take out that high there. It's not too far from it now, roughly about 40. If it gets around $47, and this would be another divergence line. So again, they haven't rolled over yet. They've topped, but they haven't really started selling off hard. So if TSM can manage to go up a little bit more, it will have a very large divergent high. You can see here the line. I have it dimly colored because it hasn't yet put in that divergent high. And you can see the PPO starting to turn down. Momentum is there. But more important than those divergences, we already had a divergent high there at the high. So TSM peaked back in January, late January of 2018, and so far that is the top. It went on after that, as you can see here, to break below this primary uptrend line and a massive red candle. What does that mean? It helps to validate the breakdown. We didn't just limp through that line. We didn't bounce back above it. It was a well-defined uptrend line, and when it broke, there was some very impulsive selling and follow-through selling in the coming weeks. So there it is. Longer term outlook again, whether we head up a few percentage points, what would it take? Let's see, roughly I have to go here where we're at right now and grab that candle. To match that high, you're only talking less than 5% just to equal that high. And that's all you'd need for divergence because the indicators are lagging. You can make equal highs with lower highs on the indicators, or you can make a higher high on price, lower highs in the indicators. But either way, we're below trend. So that's TSM. I spent a lot of time on it. I won't spend so much on these. Intel, I pointed this out many times in the past, before and after this wedge broke. That topped back in June. Intel, the 800-pound gorilla, or one of the leading was the largest, and it's not the largest anymore because it's already had and remember, these numbers I had here were before the stock even broke down. When it was in the wedge, I was calling for a 24% drop, followed by a bounce off that level, 42.59, give or take, followed by another thrust down here to 32%, for a 32% drop off I don't know if I measured it off the highs or where we broke down, probably off the highs. And so far, that one's playing out. And again, the technicals are playing out. Some of these stocks are really holding the sector up, like AMD, which I'll get to in a second. Certainly get to that one. It just clipped our stop today by a hair, and I may reshort that one very soon here. But there it is. You can see the corrections too, the cyclical nature of this stock and the industry. These are corrections averaging about 30%, and I think this one has more to go. And again, it was indicated by the charts. It's not just random, a random correction in one of the largest semiconductor stocks. And again, this speaks to the overall health of the sector. So take this all into context. If I can get through all 30 of these, you can see what's happened to a lot of these stocks. And it's just a few of these that are runaway. In NVIDIA, it's the GPU makers, the graphic processing units. NVIDIA and AMD are the two big GPU makers, and you can see that's really what's driven this. Their initial thrust, a lot of that had to do with the cyber currencies. They mine Bitcoin and other cyber currencies with those GPUs. But gaming's also been very popular. I have two teenage boys, they can tell you that. They've certainly contributed to the bottom line of both these companies. So there it is, NVIDIA. But you can see these divergences are very steep, and you already broke this primary uptrend line here, or this uptrend line, but you have the secondary uptrend line. So pretty much the rate of ascent has slowed. So this is the trend line I'm watching right now on NVIDIA. I'm watching that 40-week moving average right there, the red line as well. Those come in together, and you get a break of NVIDIA, and I'll bet you the sector will probably already be in correction mode at that point. Qualcomm, QCOM. We have divergent high really from this point on the PPO right here, but you also have RSI divergence on this point, big run up, and it's quite extended. And I'll try to get to the daily charts in a second, tell you if the timing is right for a short on any of these trades. There was a trend line back there that was broken. TXN, here's one pretty well-defined trend line, comes off the early 2016 lows, just like I believe I showed you in SOXX on the weekly chart. Pretty well-defined. You can see a lot of reactions along the way, and it just recently broke down, and it's flirting with that 40-week EMA. That's a key. I find that to be an important moving average for a lot of tech companies, Apple, QQQ. It's also the same as the 200-day exponential moving average. Because if you divide 200 by 5, there's 5 days in a week, that'll give you 40. That's why this is the same as a 200-day moving average. And you want to use it on a weekly closing basis more so. 200-day moving average on a daily chart sometimes gets taken out intra-week and you get closes. So you can see what's happening here is Texas Instruments has already broken below its primary trend line, but it's catching support. A lot of people are watching, I believe, this trend line. This moving average as support. And so far, so good, but it's in a precarious position position because it's already broken below trend. So I think it's just a matter of time. And the divergences leading up to the top there when Texas Instruments peaked also was a warning sign of a likely trend change there. So there's Texas Instruments, here's Broadcom, AVGO, primary well-defined trend line right there, broken, back tested at this point, danced on this 227 support for a while. You can see all the reactions along that level. It was resistance here, it was support here, support, and then once support's broken, you had a big red candle, and we broke down below, back tested, and it has recovered that level. So this one right now, the near-term technical picture is unclear to me, but long-term, you have this trend indicator. I always use this, or not always, but on many stocks, I like to use the PPO. I actually like to use the 9EMA, the signal line of the PPO. When that is above zero, as it was throughout this time period here, the trend is bullish. There it is. So you can see that told you the trend was bullish. Once it crosses below the zero line, the trend is then bearish. It does a pretty good job of defining bull and bear trends, and that's clearly right now, clearly below the zero line. So I think it's just a matter of how far this bounce goes before the next leg down in AVGO. ASML, here's one that just hit its primary uptrend line. We had this minor uptrend line here. We had a divergent high. You can see after the divergent high, this one's already corrected roughly 21%. So you have a lot of these stocks already down well into correction. Again, you can call a 20% drop a bear market. That's typically the definition on Wall Street, a drop of 20% off the highs. But in this sector, there's so much volatility that 20% to me is just a correction. As I showed you, in the past, the primary trend has been up, but there's been many corrections, 20, 30% in the sector itself. Some of these stocks will correct, 30, 40, 50%. And that's why I do these videos. You can sniff out the most bearish or bullish stocks within a sector and trade those individual stocks instead of the sector if you're bullish or bearish on it, whatever that sector is, and you can usually outperform. So there's one that had already took out the 40-week moving average, and it's back testing it right now from below. And you can see again that level does a pretty good job. It's not perfect. There's nothing perfect in trading, but it does a pretty good job of defining and the trend and when the stock is above. And there are periods. This was a choppy sideways trading period back here. So you sliced through it a few different times, but again, it's done a good job recently of defining that level. So we need to see that trend line go. The divergences tell us it will probably go, these weekly divergences, but it's a little more work to be done. Micron, here's one of the beloved chip stocks, already down. And again, these 28%, 60% numbers are what I was calling for up here when we put in that divergent high, and we hit that almost to the button. Now, again, these were levels I highlighted months ago back here, maybe even before we got up to that divergent high. And you can see 40.24, roughly this line right here, and we hammered right off it. That was the initial tag. So far, the bounce has been pretty lackluster. We're below that 40-week moving average, and most importantly, below trend. Here's your trend line. That broke down, and the stock has been falling since. So I think before all is said and done, meaning we get a bounce off here, maybe the bottom of that T1 zone, which comes in around 37, maybe a reaction there. But ultimately, before this next correction or bear market in the semis is over, I think Micron comes down here to at least the $26 level, and that'd be a 60% drop off the highs. So, and if you think that's a crazy, claim, especially in such a strong bull market, well, here's a 74% drop off that divergent high. We had DH1, it's like the shot across the bow, 18% drop. We continue to push higher, put in a second consecutive divergent high, so it's really an extension of the previous divergences, just like we had here. DH1, divergent high 1 resulted in a 28% drop. Maybe that's where I was calling it from before. And this is DH2, and time shows you, or we go back in time, 74% drop, 67% drop. Again, it's the cyclical nature of these things, and that's why I'm putting so much focus, and that's why I don't mind talking about this being early. We've had one official short trade on semis all year, and that was SOXX. We shorted, I'm trying to remember because I took the targets off here. I believe it was back off this high, if I'm not mistaken. One of these, and we hit the first target, which was down here. We hit the first target, reversed. I had additional targets, but I mentioned personally covering because I expected and I posted a substantial bounce. I went from short, covered my short, went long there, rode out the bounce, and then got out. And as far as official trades, I've stayed aside because we've been in the sideways trading range. I took that shot at AMD the other day, and I'll probably be back in that one soon as an official trade on the site. Let's continue on. Just get back down to these components here, and I'll move a little faster now. AMAT. This is a chip equipment maker, and one of the big ones. There's KLAC, AMAT. There's a few out there, but these, if the semis are the canary in the coal mine for the tech sector, and of course, the tech sector itself is the majority of the market now. It's the biggest component of both the S&P 500 and by far of the NASDAQ 100. Then it's 60% of the NASDAQ 100. So now, if tech is going to continue to be a good canary in the coal mine for the tech sector, then the chip equipment makers are the canary in the coal mine for the chip stocks, because these are the ones that make the materials and equipment that Intel and others use to make their chips. So when their sales start dropping or their outlook starts dropping, again, you're not going to read about it till after the fact. Quarterly earnings come out a month after a quarter is over, and so you're looking at information that's dated up to 4 months old, 3 to 4 months old by the time or 1 to 4 months old by the time you get it. And so the charts will tell you what's happening, and we can see a clear top, double top high in AMAT. And I got off topic here. I'm on a daily chart. I meant to get to a weekly chart. Let's jump back there and we'll wrap these up. All right, there's AMAT on a weekly chart. That is a stock that has topped to me. Clear. I mean, you can't argue it. I don't care how bullish you are. You can't say that this stock didn't. Maybe the correction's over, but it's already fallen about 40% off the highs. There was the last top in AMAT, Applied Materials, and it was a 43% drop. Now, the big question is, you might say, well, 40%, that's probably it. Randy, it only fell 40, what did I just say, 46% last time, 45 something. Well, remember, we're also at the now in uncharted territory. We're in the longest bull market in history. Everyone knows this one's long in the tooth. So if you just are of the mindset that, hey, one of these corrections is going to morph into something more than just a correction. It may morph into a bear market, a drop of 20% or more in the broad market. And same with the semiconductor sector. So remember, this 46% drop was just quote unquote a correction in an ongoing bull market. So it's very possible, although AMAT's already fallen about 40%, that it could fall a lot more. Let's just continue on. ADI, analog devices. There's your nice, well-defined uptrend line. There's your negative divergence like everything else. And that's the thing. I might sound like a broken record here, but it's a common theme. I like to go through the individual components. And in some sectors, you have a lot of diversity among business models. But in the semis, this sector, they tend to move pretty much in sync. Birds of a feather flock together, especially in this sector. So there it is. ADI has broken down. There's a red candle on the breakdown below trend, and 2 more weekly candles flirting right on that 40-week moving average. You can see trying to hold on to that, and you can see these are my next targets, or my targets, I should say, in ADI. As we go down the line, these are smaller and smaller companies. Here's AMD. Again, this one I need to post an update. It just clipped the stop today. I believe the stop. And I considered a daily close, and I didn't do it. Now, shame on me, because I've been doing that a lot lately. If you followed the site for a while, 2018 has been marked with an unprecedented amount of stop rates. It's almost as if, and my site isn't big enough to attract, national exposure. I'm sure it's not what's happening, but it says if they're reading the posts here on a lot of these trades, and I'm trying to use stops that I think are just out of reach of where the majority are placing their stops, because stop rates are not a new thing. They're not uncommon. But either way, we had a high today of 30.60. The stop was any move above 33.50. I should have made that a daily close. You can already see how we reversed after that stop was popped. And we're actually backfilled the gap right here. AMD has now gone negative red on the day. Already faded that pop by over 3%. Now, if you're still in it, great. I would, I tell you that I think this one's going to work out, but you still have to see this level go here. In fact, I can move that line up a little bit. We need to see about 30.50 go. I had 30.17 to be safe as a first support level, but those are still the targets. And let's just get back on track to the weekly chart. There it is. Big run up. We broke out of this trading this parallel, this price channel right here, and big run up. And again, AMD has just been on fire, but most oversold I believe the stock has ever been, coming off extreme oversold readings, potential divergence if we reverse here soon, and I think it will. I think this one has a lot to fall, a lot of hot air in this stock. LRCX, there's another one, this top, there it is, divergent high, breakdown, shot back within the above the trend line briefly, in a sense been moving lower, and most recently gave up this pretty key support about 165.50, and we're below that level now, and I don't see really anything. Sure, there'll be stops along the way, but before all is said and done, I would put good odds that this stock has another 43, 45% to fall down here to that 84.28 level. Xilinx, there's your uptrend line, there's your divergence, breakdown, backtest. It's just recently backtested, or is currently backtesting the uptrend line that it broke below, just like it did here. Breakdown, backtest, and after it backtested, started moving lower, and then boom, in 1 week that sucker dropped from high to low about 20%. So this is why I sometimes like to get in these early. This is why sometimes it'll appear like I'm fighting a trend. I'll take a few shots, get stopped out for relatively small losses, and then be in place when one of these big drops happen, because there's a lot of hot air in the semis, and you're going to see a week where some of these stocks drop easily 10% or more. And if you wait till that's happened, and then you wait for the media to start getting bearish and everybody to tell you the bear market or the bull market's over in the semis, you won't have an objective entry at that point. So I'd rather get in when the charts tell me to get in, and take small losses. If it's too early, play stops strategically. But again, we'll recycle back in. And I don't have right now with AMD stopped out. I don't think there's any semi shorts on the site, but that may change soon, and that's why I'm doing this video. And again, I'd like to put SOXX or maybe even one of the leveraged ETFs on, because these semis, they can fall very fast. And in that case, if it's a pretty quick, unidirectional slide down, those 3-time leveraged ETFs will actually outperform, give you better than a 300% return. You just don't want to own them in a choppy sideways market, and that's why I have not had SOX or any of the leveraged ones on as shorts this year. You want to own them during a pretty good trend. All right, a few more and we'll wrap up. MCHP. There it is, divergent high right there, and it's dancing on $80 support, actually starting to crack below that right now. Sometimes you get those intra-week breaks. If you look closely at this candle, see there's an intra-week break, but it snapped back up. We call that a stick save. Right now, we are below trend. It wouldn't surprise me. I'd probably put better than 50% odds that this is the breakdown. This will occur. We'll have a big, solid red close below there this week. How to trade it? Well, I'd have to go to the daily charts, tell you if it looks like an objective entry. But a lot of potential. I mean, this one, I think, comes all the way down here before all said and done to the $50 level. You're talking a, short trade, a swing short, if you're willing to ride out the counter trend bounces, 37% downside in that stock. And again, I don't want to go off topic here. If any of these stand out as compelling, or you want the levels, Randy, hey, you went over this in the video. Can you give me some near-term price targets, swing targets? This is more of a trend target, if you will. If you're going to short and tuck away for a downtrend. But if you want some swing trading targets, then I move out to the daily chart. You can see there it is. I have a little trend line right there, white trend line. This is the yellow, what I call BOD, benefit of the doubt trend line, and that one's cracked too. So I think this one's good to go right now, if you ask me. But you can always short here with a stop somewhat above, and then I'd have to look at the chart a little bit better for a little closer, I should say, for some near-term targets. All right, Maxim. There it is, uptrend. We're still above trend. So see, we haven't seen all the stocks break down, and that's why the sector is in a holding period, a holding pattern, because we have bearish charts on just about every, if not every, semiconductor stock. To me, that look like topping charts, but there are some like MKS here, sitting right on this support, about 87.90 or so, give or take. A lot of bounces there. It was resistance back here, and so once that level goes, then here's your next target down there. So that's it. A lot of these stocks just look sitting on the edge of a technical cliff, in my opinion. There's KLAC, another big chip equipment maker, right on this trend line. This is almost like an ascending broadening wedge pattern, close to a price channel. You can go like that. It's more a little bit of a broadening wedge when you do it this way. But more importantly, that's just the divergent line. That tells you right there at that high, this stock is another one like so many. And that's the thing, the majority of these companies have already peaked. You have a few runaway stocks like AMD that are adding, keeping the sector afloat, while a lot of these stocks have already topped. This one back in mid-March, and it just needs to crack this trend, and then that'll open the door for a move down here to that $84 level. Marvel, MRVL, breakdown below primary trend line, and it's moving lower since. Again, another stock well off its highs, 28, almost 30% downside in that one so far. So there's a common theme. I think the semis have topped. It's like Dead Man Walking, or that movie was Sixth Sense with Bruce Willis, where he gets shot in the beginning of the movie. He doesn't know he's dead. He's walking around the whole movie thinking he's alive, until it's almost the end of the movie. You realize he's dead. I think a lot of these stocks have already died. You just have some that are just runaway, and of course the broad market holding everything up. But again, go back to that chart I showed you before, where the semis top on average about close to 6 months before the broad market, and so far that has been the case. So there it is, QRVO, ONN, ON on semi, nice, clean, rising channel breakdown, and just see an impulsive selling since the breakdown. These stocks the majority of these stocks are in correction mode, and those that aren't are sitting right on support. Trend line support or price support right now. TER, another one, breakdown, impulsive selling, not just limp through big red candles, a little initial kickback rally, and now it's moving lower again. So this one needs to take out that low. When it does, it'll probably head on down here to 21.25. IDTI, this one's a buyout candidate. That's also held the sector up. When you see charts that look like that, that one is being purchased by another company. It'll go away soon. CY, Cypress Semi, big level there, 1465, divergent high right there. You can see the other divergent highs in Cypress, again, go back in the past, 43% drop. There was a little divergent high, small divergent high there, followed by about a 61% drop. Divergent low right there. It cuts both ways. You look for these divergent lows too, about a 97% rally. MPWR, Monolithic Power Systems, long-term trend line right there. We can move it. We can give it the benefit of the doubt here, move that down a little bit and say we're right on trend now. And as well, look at that red line. Look at that 40-week moving average just containing this rally all along. So when this goes, they both go. And that's what I like right now. I'm seeing that in QQQ. I'm seeing that in a lot of these semiconductor stocks. I'm seeing that key 40-week / 200-day moving average aligning with key trendline support. And that's why I think when those go, some traders only use moving averages. Some traders only use trend lines. Some only use fibs. There's all different stuff. I like to use it all. But I like the more support levels that I can see on a short trade setup in close alignment, the better the trade is, because more eyes are going to watch those breakdowns. Some eyes will short on the break of the 40-week moving average. Some might short on the trend line. I like to see both happen. MKSI, MKS Instruments. There you get the picture. I think we're done here. 5 more to go. I'll just run through these. ENTG. These are the smaller ones. Breakdown, back test. There it goes. Slab, trend line right here. A little false break there with support around 86.72, but a breakdown, impulsive move down so far. This will be support once again, probably getting a reaction if that's tested, unless we happen to enter that waterfall sell-off mode in the semis, and we may just smash through some of these support levels, especially on some of these stocks like this one. MLNX, there it is, a little rising wedge on the weekly chart. Remember, most of these charts I'm looking at here are weekly charts that we're going over right now. And, these smaller ones have more potential on the downside. This one dropped about 65% following this blow-off top right here. And we had a very sharp rally here, steep rising wedge, and so far it's down considerably. CRUS, 2 more to go. This one, breakdown from the trend line, bounced off this support, 35.40. Next sell signal will come on a break of 35.40. You can see this stock, what happened recently. As far as that 40-week moving average goes, it was support. It was taken out there with an impulsive red candle for many weeks, back tested, and support once broken becomes resistance, as it was all along there. Hit support, bounced, and where did it find resistance? The 40-week moving average. So, as this, if I'm correct, and the semis are in a new bear market or about to be soon, maybe after one more marginal new high, there's a couple ways to objectively swing trade off there. You can short breaks of support, or you can short bounce backs to resistance. And those bounce backs to resistance can be price resistance, trend line, horizontal price resistance, or it can be key moving averages as well. Sometimes you get a nice short off a bounce back there. SGH, that one's too new to chart, doesn't have a lot of trading history, so we'll wrap it up here. Oh wow, long video. I may have to re-record this one. I didn't realize how long I was talking. Either way, if you're hearing this, it's because I decided to put it out there. This has been Randy Finney with Right Side of the Chart. I hope you